Hey everyone, welcome to my YouTube channel. I am Bharat. In this channel, we're going to talk about crypto, equities, bonds, macro, and many other interesting things. This is my first ever YouTube video, and I always wanted to start some kind of a hobby where I can explain my thoughts on the market and see where we are headed. So let's get started. The topic of today's video is: Are we in a bubble? Right? Um, to answer that question, really, nobody knows the answer, right? Are we in a bubble or not? There have been many people who have been calling for a bubble to pop, but oftentimes they're more wrong than they're right. So we're going to take a specific lens today and see it from a perspective of mega IPOs. On my screen, you can see the chart of S&P. I'm going to turn it to a monthly chart now. Cool. What you're seeing here is, wait, where did it go? Yeah, here. So what we're seeing here is since 2008 financial crisis, we are in almost an 18-year long bull market, right? Uh, in 2008 financial crisis, we were around 57% down. And when you really compare it, after that, the markets haven't taken a backseat, right? It has been a very consistent 18-year bull market. The only real kind of like drawdown that we had, that to a V-shaped recovery, was back in 2020, initiated by the pandemic. That was more of a 34%, right? And you could say, hey, we also had a bear market in 2022. So we had around 27%. But just imagine the length of this bull market compared to what we had in the 80s and 90s, right? Um, in 80s and 90s, we had significantly frequent recessions, oil shocks, and whatnot, right? So we can confidently say that we are in a consistent 18-year bull market. But we never really had a recession in these 18 years as well, right? So we're going to take a look at from the lens of mega IPOs and see what could be the possibilities of the bubble that might be popping, right? You might have heard about the three biggest IPOs that are coming into the market this year, including SpaceX, Anthropic, and OpenAI. SpaceX has been the largest IPO ever in the history of in the whole human history, right? It's being valued at $1.8 trillion in market cap, and they're looking to raise around $75 billion, right? The previous big IPO was Saudi Aramco in the last 25 years. It was done in 2020, and Alibaba, Visa, and PetroChina, right? But a $1.8 trillion valuation at IPO is humongous, right? They're looking to raise a lot of money. So we're going to take a step by step here, right? So SpaceX is on track to be the largest IPO ever. Saudi Aramco, which had an IPO in 2019, tried to raise $29.4 billion, then Alibaba, SoftBank, and many other things. So you can see how SpaceX have been literally dwarfing every other IPOs, right? I was taking a look at the SpaceX S1 filing, and what really stood out interesting for me is they have this category of revenue, which they expect from different market segments. And the clearly one thing that stands out in this is enterprise applications, right? They expect in the next 5 years or so to get $22.7 trillion from the whole enterprise applications. And they're so bold to not even double click on that on where the enterprise applications is going to come, and how are they going to justify the 95 times sales ratio and a 1.75 trillion market cap, right? The other revenue drivers are digital advertising, adding up to $600 billion, consumer subscriptions, $700 odd billion, and AI infrastructure, $2.4 trillion, Starlinks, mobile and Starlink broadband, and space-enabled solutions, right? So SpaceX, essentially a company which is supposed to be a company in the space industry. There's only effectively $370 billion is coming from space industry. The majority, the lion's share of business is coming from AI, or at least they expect the revenues are going to come from AI. And next is connectivity. So I'm myself wondering, thinking, is SpaceX really a space company or if it's an AI company, right? So 93% of market SpaceX is selling you is AI software. It does not build, it does not sell, and it does not own, right? So I read this post and I completely agree with it that that's not a moat. That's just a handshake. And it's also based on the fact that this AI revolution going on. And then I genuinely believe that it's it's a way for insiders and for private investors to dump on the retail, right? I had a really interesting exercise of taking a look at the United States GDP for 2026. For 2026, the United States GDP was like $32.8 trillion. So effectively, what SpaceX filing they have to say is more than half of the United States GDP they would be expecting to get in from AI, right? In the next, let's say, 3 to 4 years. My question is, even if in the next 3 to 4 years, United States GDP, if it's growing at 2% or 3%, it might reach 35, 36, 37 trillion dollars. It's still $26 trillion, a single company contributing more than 60% to the GDP of a country. I don't know what to think of that. You are the best judge, right? And I also saw this chart on Twitter that in the past 30, 40 years, the biggest IPOs that the companies had, and compared to the nominal GDP at that time, what would be the percentage of the valuation of that specific company, right? What you can see is SpaceX, with listing at around 1.75, 1.8 or $2 trillion, is projected to be 6.2% of the GDP, of the nominal GDP, right? I mean, take a look at the others, right? They're not even close to a 0.5%, or the highest one was probably what? Facebook, yeah. In 2012, it was 0.61% of the nominal US GDP. So just see the magnitude of the IPO, what SpaceX is offering and listing, right? And I had to take I took a look at their balance sheet and their sales and operating revenues and stuff. In 2025, they made around like $18.7 billion in sales, and they had an operating loss, not even a profit, operating loss of $2.6 billion, right? And the first quarter of 2026, they were $4.7 billion, and then still again, operating loss of $1.9 billion. So effectively, for a company that's not even making profit at this point, it is being offered to the general public at 93x of sales, right? So I don't even have words to explain how insane of a valuation this is. And it's not only about SpaceX, because of the AI revolution, you may call it, or I call it peak mania valuation. So S&P 500, sorted by price to sales ratio, as of today, more than 51% of the companies in S&P 500 are priced at more than 10x of the price to sales ratio. If you talk with Warren Buffett or Charlie Munger, they'd be like, 10x is the most absurd valuation that you can get whenever you're buying any asset. And this list includes NVIDIA, Apple, Google, Microsoft, Broadcom, Tesla, and many more. So you can just see how insanely priced out the market is, and 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 the retail is just being offered at a super high valuation, right? I was taking a look at another chart that Thierry from RV had posted on X, that the 2000 dot-com bubble that happened, there were significant precursors to that, right? I mean, I was not there at that time, but judging by the media and the reports and the documentaries, the dot-com time was really, really insane, and people were completely on mania, right? People left their jobs and then they went for stock trading because, hey, who wants to work at a job when you can 10x your money overnight, right? Pets.com, Cisco, Nescafe, and many of these companies had reached huge peak valuations, which they did not attain again until the 2006 or 2007, or even probably 2013, right? In case of Microsoft. So even in 2000, the Netscape IPO, Yahoo, Amazon, eBay. So all these were precursors to the dot-com bubble, right? In 1995, it was Netscape, 96 Yahoo, 97 Amazon, 98 eBay, Globe.com, Pets.com, you name it, right? So this is not a sign of a healthy market. This is a sign that it's top heavy and there is a significant flush coming. Nobody knows the time. It might be 6 months, 1 year, 2 years, but a correction is definitely pending in the overheated sectors of the market, in my opinion. I was also taking a look at this chart that in the past 25, 30 years, all the IPOs that were listed on NASDAQ and also on the S&P 500, after 1 year, an average drawdown of 55% was expected in the year post IPO, right? So not necessarily you have to buy a specific stock on the day of an IPO. Usually the best time to buy a stock would be probably a year later, when you let the business run and you see the results, you see their earnings report, you listen to earnings calls, their free cash flows, their plans, and then you can buy the stock, right? It's not like you cannot buy a stock if you miss the IPO, right? Some examples could be Facebook, you know, just basically halved, Shopify halved, Snowflake halved, also Palantir, and many other companies, right? Also Robinhood, if you see, it was down 90%, Rivian was 88%, Lyft 79%. So the list goes on and on, right? Usually IPOs are a way or a means for insiders, for PE funds, for venture capital funds, for employees, early employees, as an exit, right? So in my opinion, getting into FOMO is not really the best idea in terms of IPO, right? And we are also seeing a lot of signs that, for the past 30 years, the rules have been unchanged, that the index providers such as NASDAQ, they waived the profitability requirement from 90 days to just five. Um, and what this does is people have their 401k, their retirement funds, and their insurance funds. Everything will have to invest in the market, because once it includes in the index, you cannot exclude a company while investing in the index, right? So I guess this full of manipulation going on, in my opinion. At least, I mean, I saw this, that Fidelity lowered the minimum account requirement for SpaceX from $500,000 to just $2,000. That's absurd, right? $500,000 can only be accessible by high net worth or ultra high net worth individuals, but lowering that by 250 times is crazy. It's just crazy, right? It just shows that they want people to invest at any cost, no matter how much money do you have, right? Um, and the worst part that I saw just today is, the investor demand for SpaceX IPO approached 4 times. I mean, can you believe it? The most expensive IPO ever in the human history, oversubscribed by 4 times. That's insane, right? And it's not the only one. Along with SpaceX, we have OpenAI, we have Anthropic, and we have many more companies. Reaching $1 trillion used to be a huge feat. I was like literally overjoyed when a company reached a $1 trillion because you don't have many countries in the world who reach $1 trillion GDP. And here there are companies left, right, and center in the United States reaching $1 trillion every other Tuesday, let's say, right? So OpenAI, Anthropic, they're also valuing $1 trillion, and they both have filed S1s, I think, in the last 2 weeks, and OpenAI filed this week. So they're also coming up, and I'm not really sure where the liquidity is going to come from for these companies to get their quotas filled, right? And I want a bit of talk about macro because today Japanese PPI inflation report came in. The expectations was just 5.5%, and the actual result came in at 6.3%. So it's a bad thing for the markets, right? When the inflation is running hot, if they reduce the interest rates, the animal spirits are just going to go wild, right? So there is an expectation that the Japanese central bank is going to increase their federal funds rate by 25 basis points from 75 basis points to 100 basis points. That is 1%. So that's a pretty big deal because Japanese Fed holds a lot of U.S. debt, long-term debt, short-term debt, 10 years to 30 years, you name it, right? Japanese central bank has been backstopping the U.S. debt spiral in a way, right? Also, I was taking a look at FedWatch in a sense that the next meeting for the United States Fed is going to be the 17th of this month, literally in a week. So the expectation is that they will hold the rates constant. And if you see for the rest of the year, the probability is just that they're going to keep the rates steady, right? And in the October of this year, 28th of October 2026, there's a significant chance that they might be able to even raise the rates. And going into the next year as well, I mean, half of next year or until the end of next year, the probability is that they're not going to cut interest rates. Last year there was a chit chat in the market that they're going to cut rates. But seeing by this, I guess it's going to be really hard for the new Fed chair, that's Kevin Warsh, who's going to come in and to cut rates, right? So based on all these things, what I think could be happening is we need to remember that we are in a midterm year. I'm going to change it back to the weekly. Just going to adjust this. So really, after the tariff scare in April last year, we really had a significant run up, right? We had a run up, and we had a bit of a drop down, and then again, right? So the market looks like it's not stopping, but you need to zoom out, right? Whenever in doubt, zoom out is what I have learned in the markets. So I guess, let me remove this. Yeah. So since 2020, the market has given probably 235%. So in the span of 6 years, 235%. So that's effectively 40% a year in dollar terms, right? It's insane. The markets generally, on average, tend to give 7, 8, 9%. But in this occasion, if we count it from bottom to the current price, it's like 40%. So what I think is we are heading towards a top-heavy situation. Nobody knows when the next correction or a crash or a bear market gonna come, but it's definitely gonna come. Markets are going to humble everyone. And I have a favorite quote from Benjamin Cowen saying, bear markets make fools of both bulls and bears, right? So market humbles everyone. And I guess you just need to keep a lookout. Don't FOMO into the IPOs. And yeah, just basically keep an eye on the market and then think logically and then invest, right? So that's it for today, and catch you in the next video. Thank you so much.